Hi, this is Jim Lang. This is the fifth of a video series on the best estate plan for traditional married couples, and particularly in the, let's say, shadow of what I think is a dreadful law that I think is going to pass that we are calling the death of the stretch IRA. In the first video, we kind of introduced the concept. In the second video, we went into the nitty-gritty of what happens under the existing law to your IRA at death, and then what happens under the proposed law. And I talked about the advantages of leaving money to a spouse. This was in the last video, the fourth video. Then we talked about even greater tax advantages to leaving the money to a child. Well, there is a third option, at least if we're talking in terms of generation, and that is grandchildren. Now, if you remember from the second video, at least under the existing law, or to the extent that we can utilize the exception under the proposed law, the grandchildren with a very long life expectancy get the greatest tax deferral. Now, yes, I grant you, most people prefer to take care of their spouse and their kids, and they prefer to take care of their kids before their grandkids, but at least setting this up, understand that there are enormous tax deferral benefits or tax-free benefits in the case of a Roth if you have very young beneficiaries, again, most likely grandchildren. Also, just as an aside, if the beneficiary is going to be a grandchild, you will want a very well-drafted trust, and you want that trust to meet 5 specific conditions in order to qualify as a beneficiary designated beneficiary of an IRA or a Roth IRA that will allow the grandchild to stretch or defer the income taxes on that IRA or defer the distributions on the Roth IRA. And if it doesn't have all 5 of the conditions and it's not done just right, then the income tax will be accelerated and it will be literally a financial nightmare. So the grandchildren are another potential beneficiary. So let's go back to our Leave It to Beaver, original husband, original wife, same kids, same grandkids. So let's talk about the 3 alternatives that we have discussed so far. We've talked about the surviving spouse, all the tax advantages, and the other thing is the natural advantage that we want to take care of our surviving spouse at our death. Also the children, that comes next, typically after the surviving spouse, but let's say the surviving spouse is alive and has more money than they need. It might be very interesting to leave the IRA, or at least a portion of the IRA, to children who have a much longer life expectancy, have, at least under existing law or within the exception, a lower minimum required distribution of the inherited IRA. And if you look at the whole family as one family unit, a much lower tax base or a much lower total taxes paid by taking at least a portion of the IRA and naming children. Then what's even potentially better in terms of tax deferral, or in the case of the inherited Roth, deferring the tax-free distributions from the Roth, which is trusts for the benefit of grandchildren. So let's assume, for discussion's sake, maybe you want to leave a couple bucks to charity, maybe you want to leave a couple bucks to somebody else, but let's assume that you are part of this, what I would call Leave It to Beaver family, original husband, original wife, same kids, same grandkids. Is it fair to say that the 3 choices are really surviving spouse, we've gone through some of the advantages and disadvantages, the children, and the grandchildren? Well, what's coming up is going to be, if you fall in this situation, a description of the best estate plan for you. Thank you.